Hello and welcome to another update video about DOT. Let's talk about the two wave counts that we have here on the chart. We have a yellow count, which is, you could say, short-term bullish, and then we have one in which we could make another low, but both are overall at least bullish and could lead to new highs above the December highs. And the swing high that formed in December was at around $9.60. The only thing is, okay, do we, that was the table, do we go up more directly, yeah, or do we get another dip into the support region? At the moment, I cannot confirm that the low is already in, even though if I had to give you probabilities, the move of the last few days certainly would have increased the probabilities of a more directly bullish scenario, but DOT is still far away from confirming it, okay? So obviously, we are dealing here with two scenarios. We are dealing with the yellow count, which is a potential diagonal pattern, wave 1, wave 2, wave 3, wave 4, and wave 5. Here, it's also possible. It doesn't really make a difference. I could also say it's the B wave, which might have bottomed already. That's really short-term, absolutely irrelevant. The idea is, however, that obviously in one scenario, the low could already be in. Certainly, the dip was significant enough to correct this move to the upside. Yeah, we've reached Fibonacci support zones that are absolutely relevant. And it's just from a size point of view, yeah, duration, time duration, but also retracement. Yeah, the retracement is acceptable for correcting this move to the upside, especially in a wave 4. Absolutely acceptable. Already a little bit too deep to be reliable, to be honest, in a wave 4. So as I said, it could also be a B wave, but that doesn't matter so much. The idea is that obviously it's possible that the low was in and that we're now moving up in a wave 5. In this scenario, to confirm this further, I need to see 5 waves in yellow, reaching ideally $9.05 plus. The third wave should reach $8.60, ideally. That's pretty much where we have the previous breakout point or the previous swing high, which I consider a breakout point here, the green line, at around $8.60. So that means if we can see the price get to that level, then we might get a pullback and then another break higher in 5 waves. That would be our confirmation that a low was in, and then we can continue to look forward or can continue to watch for higher prices in wave 5 there over the coming weeks and months too. Yeah, I mean, you could say $10 plus. In this scenario, I wouldn't rule out, yeah, probably the $11 range, and then we can take it from there. We need to see how the subwave structure develops. It's important in this structure to first of all break above Fibonacci resistance, which we have here, between $7.17 and $7.95, and then obviously the third wave, which is the bullish perspective. Third wave needs to ideally reach $8.63, or we cannot hold that as a relevant scenario. Once we've reached that area there, I can add a support area for wave 4, and then if it can produce a 5th wave, then yeah, we have the first confirmation that we're on the way up, okay? Okay, in a short-term bearish scenario, we have a complex WXY structure. In the Y wave, we're dealing with an A, B, C structure, and also this B wave might stretch a little higher. However, in the white count, the market should really react to that Fibonacci resistance area, retracement area here between $7.17 and $7.95. We also have the 748 level in between, which is the golden ratio level. And then one more low is likely, especially as long as we only have 3 waves, and especially as long as we are dealing only with with a move into resistance, okay, and we haven't even broken above resistance. So at the moment, I'm still favoring the white count. It's not a strong leaning, especially considering the entire market, which was quite positive in the last few days. But I would still slightly lean towards another low here. And I cannot confirm that, however, until we really see a break below the last swing low, which was at $6.55. And I will start to lean towards the yellow count with a break above the resistance area and the price reaching $8.60. And then it would still, however, give me more evidence by forming a 4 and a 5. But in the white count, if we really get above resistance, it would be too high for a reliable B wave. So that should give you all the relevant parameters essentially for a trader. I mean, I don't really see a very attractive setup here until, you know, the price dips into the yellow support zone. It might never do it, but I think that would be a decent reward to risk ratio and nice setup. That support region is between 585 and 440. As long as we're holding above $4.40, however, overall, yep, I'm watching for new highs above the December highs. Only below 440, I would have to emphasize and favor basically new bear market lows. But this is a key level against which the overall focus can be on higher, either more directly or after another dip then, okay? That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.